Happy Friday. What's going on, guys? It's Ricky here with a super quick market update. So overall, NASDAQ market is nearly break even on the day. It started off green. It's retracing a little bit, but now it's finding a support and maybe it can begin to recover. So what exactly is going on? What caused all of a sudden during the pre-market session for the market to gap up? We talked about that yesterday. And then all of a sudden we peaked, began to flush out. Now we're showing signs of a support. Are we going to begin to recover, or are we going to continue to sell off? I do want to also make you aware that Trump has announced that at 4 p.m. Eastern time, he has an announcement. We'll see if that announcement influences overall markets. Well, the first thing that I want to talk about is what caused markets to trade higher, especially during that pre-market session. We had a series of reports come out, and the most important one, in my opinion, is the unemployment rate and then also the non-farm payrolls. Non-farm payrolls are applicable to individuals that are in non-agricultural jobs. And this represents about 80% of the labor market in the United States. So for the month of August, which was already incredibly low, there was only a forecast of 75,000 jobs that were expected to be added. 22,000 got added, much lower than what was expected. You might be asking, well, Ricky, why does the market react in a positive way based off of less jobs being available? It's not because the market thrives on a weak labor market. Not at all. We talked about this yesterday. I want you to fully understand this. The reason that the market reacted in a positive way is that because the labor market is so weak, the Federal Reserve is expected, almost certain, to cut rates on the next FOMC meeting. And that's what the market wants. That's what the market is reacting to. So why did the market go up? Based off of the certainty that the Federal Reserve is now more likely today than it was yesterday to cut interest rates based off of how weak that labor market is. 22,000 jobs were added with the expectation of 75,000. My concern with this, and feel free to share your thoughts down in the comment section, is that is not just a weak labor market. That is a terrible labor market where expectations were already lowered. But again, they continue to come in lower and lower than what is expected. As many of you guys have heard, people like recent graduates and well-qualified individuals are struggling to get good paying jobs. It is not a conspiracy. It is a fact. The labor market is weak and the economy is feeling it. So we'll see how things continue to develop and to see if the Fed, by cutting rates, can drive up more demand. I know that stocks can push up higher because of that. But again, will businesses actually be encouraged to hire more people simply on cheaper rates? A question to actually ask yourself. And then the unemployment rate, this was not much of a surprise. We came in at 4.3%, and expectation was 4.3%. The prior is 4.2%. So yes, unemployment is going up, just like inflation is also going up. Also a big concern with cutting rates. Cutting rates is inflationary. So if inflation, and that's going to be tracked next week with the CPI and the PPI report, the Consumer Price Index report, we'll get a better understanding if inflation is continuing to uptick, because again, that can cause a shift in the expectation of the Federal Reserve in cutting rates. What I want to share with you guys is, again, we're about, let me update this. We are about 1 week and 5 days away from the next FOMC rate decision, and there's been a huge shift. There is at one point a probability that the Federal Reserve was going to pause. That is no longer after today, which is what I wanted to share with you. Now the probability is a 92% for a 25 basis point rate cut. And now for a 50 basis point rate cut, there's a 7.4% probability, because now the market is expecting that the labor market is so weak that they might actually cut rates even more than what was expected. That would actually be quite surprising. The stock market would love that, right? And this is why we've been making it very clear that, hey, markets are overbought, markets are overextended, but they can continue to push higher if the Federal Reserve does exactly what the stock market wants them to do, and that is aggressively cutting rates. So I do not know what they're going to do. No one does. Everyone can share their expectation of their predictions, but I want to remind you that means absolutely goose egg. No one knows exactly what is going to happen on the next FOMC rate decision. So this is why it's important to not be scared, but to also just be mindful of how leveraged you are if you are at these overbought levels, something to take into consideration. My most beautiful trade today, it's been a slow week for me, to say the least. I shared a little bit about this with my LPP team, and also if you're part of my close friends on Instagram. I feel like the market this week has been a little bit choppy. It was at least a slow week for me. I've been kind of struggling to see, hey, is market bullish? Is market bearish? One moment we're selling off, another moment we're recovering, another moment we're selling off. There's a lot of inconsistencies, in my opinion, with the market, with what's going on with tariffs, right? Are they illegal? Are they not? Are they going to get reinstated by the appeals court, or are they going to get banned? And do we have to refund all of these tariffs? That's a whole issue within itself. When it comes down to what's going on globally, right? The UK bond market, global bond yield skyrocketing, signaling huge red flags, not a good sign. And now the weakening labor market and the rising inflation rate. These are the things that I'm paying attention to. And this is a lot of the stuff that almost contradicts one another, right? Of like, okay, well, yes, we're expected to cut rates, but so did the UK. The UK cut rates, and yet their bond yields are still going up with a 4% interest rate. So again, cutting rates doesn't necessarily mean that bond yields have to come down. And that is the big concern that a lot of people have right now. If you want, I can make a little bit more of a detailed video over the weekend talking about what's going on in the UK. Again, different markets, different economies react differently. I'm not saying that that's going to happen to us. I hope not. But the terrible setup that they have is they've been cutting rates, just like our government has been begging the Federal Reserve to do. But as many people are concerned, is by them cutting rates, it has not caused bond yields to go down. So interest rates are still incredibly expensive and their economy is struggling. There's huge red flags. Definitely something to be paying attention to, and hopefully something that we can learn from. So I'm excited to continue to learn more as things continue to get announced. But again, my most perfect setup today was the overbought reversal short that I had set up with Lulu. Lulu reported earnings yesterday at a huge gap down. I didn't take part in any of that, but right at market open during today's live trading session, this thing began to rip up. And the thing that I loved about this is that its true direction was bearish, but it was ripping up based off of people buying the dip, right? A dead cat bounce. They bought the dip, but again, just like we know that as something becomes overbought, and especially if the NASDAQ market was also overbought as it was, and the NASDAQ market begins to retrace, it will only fuel the fire for more selling pressure. And guess what happened? It began to sell off. This thing at one point, hit highs of 176, and from the highs of 176 has hit lows of 167, losing about 5%. I didn't catch the whole 5% move, but I made $5,300. My position is fully closed other than my one lucky share, and the only other trade that I currently have is my current short on American Eagle. American Eagle reported earnings. This thing gapped up about 38% yesterday. In my opinion, it's incredibly overbought, and there's some decent downside potential, kind of the opposite setup of Lulu, right? If this one's overbought, Lulu was oversold, but nonetheless, again, both offer some form of short opportunity. I'm up about $1,400 on this one. So overall, nearly around $7,000 on the day. It's been a slower week for me, especially with my trading day yesterday. I lost $1,900 on AEO, and that's American Eagle, and then I lost $1,700 on HIMS. So I've had some good green days. I've had some good red days. And then today was definitely my most substantial day. It was my biggest green day, and I'm right around 7,000. So again, not every day and definitely not every week is going to be a home run. What I've learned from this is when market conditions and market direction is unclear, I need to recognize that quick and size down on my position. I don't need to be scared. I don't need to not trade the market if I don't want to. It's not the worst if you kind of hold back and stay cash. But if I do want to trade, I have to respect the trend or the lack of trend, stay cash or stay light, making sure that if, again, the trade does go against me, it's an easier position to tolerate. So again, very excited to kick off next week with you guys. We have the PPI report and the CPI report. It's a great time to be invested in the market, to be paying attention. And if you want to tune on into our live trading sessions, we have a huge sale going on. Second link in the description down below. You can join LPP for as little as $1 a day is what it breaks down to. So whenever you're ready, second link down below, you can sign up. It's a one-time payment, lifetime access, and you'll be able to watch me trade live as soon as Monday when the market opens. Like always, let's make sure that we end the year on a green note. Take care, team.